Hello and welcome to Moving Iron Podcast. Markets with Shawn Hacket. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. If you'd like to get a free Axon travel notepad, send an email to marketing@axontire.com and they will send one to you in the mail. Just give them your details there at marketing@axontire.com. Tell them Moving Iron Podcast sent you and they will send one to you ASAP. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs at Valley Transportation. Our goal is to help you reach yours. No matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Valley Tractor Zoom has over $20 billion in heavy equipment sales data. Tractor Zoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. This podcast is also brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Create connected customer experience and transform how you work. Shawn is with Hackett Financial out of Boca Raton, Florida, and he is nice enough to come on and talk about what's happening in the market. So, Shawn, how you doing this morning?
I'm doing good from Little Rock, Arkansas. So,
right next to Big Rock.
the Clintons, the Clintons say hi.
Oh, yes, they do. Yes, they do. Shawn, there's down there giving one of your speeches. Gonna talk a little bit about what's happening in the weather and your forecast and those kind of things.
Yep. Another speaker engagement in front of the Arkansas Ag Bankers Association, and looking forward to that. And I'll be doing that a little bit later on this afternoon, and then I finally head home for a little while. So
that's good. So speaking of home, you have a hurricane that is bearing down on the Gulf Coast side of Florida, more importantly, Tampa. And as you look how it tracks up through the the Florida Panhandle into Georgia, South Carolina, those kind of areas, you got some pretty important times going on right now when you start looking at cotton, soybean, and corn, peanuts, those kind of things. Looks like most reports are saying that there's not too much to worry about there. But in your opinion, Shawn, as you take a look at that, what's your thoughts?
there is still some thing to worry about there. I mean, I wouldn't say it's mission critical, but I mean, there's definitely some damage that can be done. But is it enough with all the other damage we've had to make a difference over the worries over the global economy, the demand, the deflation that we've been talking about? It could create a little bit of a move higher, Casey, but I don't think Georgia alone is going to be enough to move the dial or really change how people are perceiving the cotton market and future demand. So if it had happened a few weeks earlier, I think it would have been more impactful. But as it stands today, certainly some damage, a little more off the top, but we were already dealing with a crop that was pretty much one of the worst crops the U.S. has ever had. So I'm not sure that really changes the dial too much. So,
right on. Okay. So as you're looking at the overall damage perspective of what you see happening in Florida right now with the hurricane that's coming through, like you were talking about earlier, you were talking about Tampa's at pretty low level and the bay's at a pretty shallow bay to start with, so there could be some pretty significant damage there.
Yeah, Tampa just doesn't get hit. I mean, I think if you look back, I think the last time Tampa got hit was 137 years ago. So, they don't normally get a direct hit. This is very unusual. Usually it'll go into the panhandle or, it'll go into the southwest Florida. It's very, very unusual for the tracks to do what it's doing. But the problem is anyone that's been to Tampa knows, that they have this huge, wide, shallow base of a bay, and everything. The whole city's just ground floor. You get any kind of a surge of 5 feet, 10 feet, 15 feet that they're talking about, the entire downtown Tampa is going to be underwater, Casey, just completely underwater. So that, is just really that's more than okay. There's some damage. The lights went out for a little while. I mean, that's a long-term rehabilitation issue. That's going to take 6 to 12 months or more to remedy downtown Tampa. So for those that are operating in Tampa and in the surrounding areas, it's going to be life's not going to be normal for a while. It's really going to be a pretty catastrophic situation for the immediate coast. And once it goes inland, it's going to quickly weaken down. I think category 1 or 2 real quick, and then it's just a rain event. But the immediate coast there, it could be on the verge of catastrophic, unfortunately. So
Yeah. Well, thoughts and prayers to folks there in Tampa. It looks like there's going to be a lot to deal with. Sounds like they've started evacuating a lot of Pinellas County, right in that area, which is that general vicinity. So a lot of stuff headed that way. It'll be keep your eyes on that to see how things move forward there. So, all right. So let's jump over and talk about China for a minute. The World Bank came out and slashed China's economic growth forecast from their projection of actually the bank's prediction of 5% down to 2.8%, largely based around China's zero COVID policy. Um, uh, zero COVID policy. And China, obviously is saying, no, you guys are wrong. We're going to be double that. We're going to be, somewhere between 5 and 7%. So looking at that, Shawn, I mean, makes a lot of sense with the rest of the world, what we're seeing happen in the rest of the world right now. I guess as you look at that kind of news coming out of China, what are your thoughts there?
I mean, everyone knows they're in trouble. They've been in trouble for a
Right.
long time. Their real estate market's collapsing. Their economy is collapsing because of this COVID policy. The severe drought they had in the uh, you know, southern part of China, ruined their hydropower. So they've had rolling blackouts because of the loss of hydropower, not having enough coal. It's just you know, uh, there's just no way for them to have a good economic outcome. The first thing they have to do is have to stop locking everybody down. Uh, that's the first thing they have to do. And weather is weather; it comes and it goes. But I mean, these rolling lockdowns really have to stop, or else their economy is going to continue to struggle. And of course, China's the one that they're the marginal buyer of everything. They're the biggest buyer of corn, of soybeans, of cotton. Go down the list. Dairy. If they're going to continue to be in this economic malaise, the demand from China is going to continue to suffer, which means prices are going to have to reestablish a new price level with Chinese demand being offline for an indeterminate period of time. It won't last forever, but right now that does not look like there's any end in sight. Now, of course, they have this big meeting here where Xi is trying to get his third term. There's a lot of talk that once he gets it, everything will change. Maybe it will, maybe it won't. I don't know what will happen other than it'll be interesting to watch if there's any change in policy, assuming he is given that third term, which I think he will. Does anything really change? Is that the call to action that now he will change a lot of his policies because now he's in it and he doesn't have to worry about whatever he felt he had to worry about going into it? I don't know. But for right now, China demand side problems continues to be a major concern for not only ag prices and commodity prices, but for the overall global economy as a whole. So,
Yep. Yeah, it's an interesting situation to pay attention to. There's just a lot of moving parts there and of course, you don't know what's real and what's not. So that's the other side of that too.
well,
So it will be,
I think his new minister of communications is Pinocchio. So,
yeah, yeah, I would agree with you that, and pretty easy to tell when they're lying. So
yeah.
um, when you're looking at let's talk about corn a little bit here. So we're headed into corn harvest. Most places are just getting started or have been going for about a week or so. So if you're looking at a lot of that activity you see out there, obviously harvest weather is going to be great. There's not much issues out there as far as the weather goes, but the decline in corn is continuing to show up. So I guess Shawn talked about that a little bit, what you see there.
Yeah, I mean the market's already reacted to the crops, smaller than many thought. Um, Obviously, the market will speculate on what the USDA is willing to say at the next report here. I think it's next week, and but I kind of think we're getting pretty close to pricing in whatever the number is, 168, 169, 171. Pick a number. I think we're pretty much established what we need to price wise when we approach seven. Um, and now we just have to pay attention to South American weather. Right now Brazil's getting fantastic weather. Argentina is still, not getting great weather. They're pretty dry, and but Brazil's really the one that really matters, though. I mean, that's Brazil's good. Argentina can be bad, and it'll be fine. But Brazil cannot be bad. It's one of those things. And so far they're getting a lot of rain. Uh, it's allowing planting to move forward in good condition. So I just kind of feel we've reached a point of maximum pricing in of a lot of these bullish factors. And I think we're starting to price in some of these bearish factors, which we've been talking about, which is the tightening of liquidity, higher interest rates, slowing economies. I don't care what anybody says, demand for corn is going to be lower than we think than in the upcoming 12 months than it was in the last 12 months based upon the economic outlook. We can argue how much lower, but whatever the demand is on the balance sheet right now, it's too high for soybeans, for corn, for cotton. And so the market's trying to determine how much lower does demand really have to be? How far is the Federal Reserve going to go? And the answer is we're still trying to figure that out, Casey. So I think the bigger issue right now, until or unless weather in Brazil becomes an issue, is just following the economic data, following the macro picture, following those kind of factors. Because if this economic situation continues to remain gloomy, it's going to be pretty hard to get prices substantially higher than we've already seen without a pretty dramatic weather worry out of Brazil. Which, if we did get something, it wouldn't be until December, January at the earliest that we would get it. So, plenty of time for the markets to, sell first and ask questions later. And we're starting to see a lot of that happening, in a lot of different markets. As the markets now, it was all for months. It was, oh my gosh, there's no supply, there's no supply, there's no supply, there's no production. Now everything here is demand's hurt, demand's low, demand's shrinking, demand's a problem. It's a big change in the focus of the market. And until the market stops worrying about demand, or until supply gets hurt more than the market believes now from something new coming along, I think the trajectory into the end of the year is for a general lower trend in commodities and ag markets. Sure, can you have a day that we bounce from time to time? Can a particular market go higher for unique circumstances? Sure, but as an overall trend, Casey, I'm worried about lower prices into the end of the year, unless there's a dramatic change of guard by what the Fed Reserve has, already said they're going to do, or China has an epiphany and they just reopened everything and they say let's go, and we have to see something pretty dramatic to change that view of a lower prices heading into the end of the year. So,
right on. All right, so let's talk about, speaking of China, let's talk about the pork market, what we see happening there. So China released a fourth batch of pork stocks ahead of their week-long national holiday. It's coming up here, starts October 1st. Talk about that pork market a little bit, what you see happening there.
Pork's a little bit of a different situation. I would say pork is somewhat economically, the pork market in China, it's one of those must-have food items, especially as you go into the end of the year. I think China will do whatever they have to do to secure the pork supply, whether the economy is bad, good, or indifferent. So I think that's one particular market that's probably not going to be terribly impacted by the economy in China. So we've seen the pork price skyrocket. We've seen the Chinese hog price skyrocket. Like, as you said, they've been dumping these frozen pork stocks onto the market at record levels to try to keep the price down. So at some point, I don't think they have enough to do that. They're going to have to come in and buy from elsewhere. And so there could be in the hog market here, Casey, there could be, could be one of the few markets that has a bright spot going into the end of the year, because I do think the Chinese demand for pork is economically insensitive. and they're going to buy it no matter what. So I might look for the hog price and the pork situation to be, maybe one of the few areas that you can actually see some good, more bullish looking supply and demand equation versus other markets that I think are going to struggle.
Right on. All right. So finally, let's jump over and talk about what's happening in the cattle complex. When you look at what's happening there, you've seen a lot of sell-off in various markets. We've seen the stock markets are wildly volatile. A lot of downward pressure since the announcement of the Fed's rate changes, those kind of things, which should have a direct effect on at least the cold storage report and those kind of things. So looking at what's going on in the cattle market, Shawn, what are your thoughts there?
We have a lot of beef in the short run. Our cold storage is full. We just finished another huge round of herd liquidation. We got plenty of supply in the short run, and we have demand. I mean, demand's going to be weakening for beef demand. There's just no question about it with what's going on. So cattle prices are a little problematic for us, for the next month or two. I just think we have an air pocket here in demand. We have too much supply, and I don't see what's going to really change that. Now, once we get beyond that point, we then enter the period where the supply just completely dries up. And whatever the demand is, the demand should be well in excess of the available animals that could come to the market through the packing houses. So I'm a little worried, and I continue to believe that this correction we've been seeing in cattle has more legs to it. It has further to go, at least into October, maybe into November, before we kind of trade this air pocket of demand. So I would be a little worried about it. I think prices are heading lower. And if I was a cattle producer, we've been recommending our cattle producers, get some cash sales made, get some hedges on to protect fourth quarter prices. After that, we're pretty constructive. So that's a little bit of a different thing because cattle, the beef is still very much a domestic issue. Yes, Chinese demand for beef can help, but it's really still all about the U.S. And if the U.S. demand is going to falter and we have too much supply that needs to come to the market, says lower prices to me. So I'm a little worried about the near term, but I'm very excited about the intermediate term for what 23 looks like. I think we could be entering one of these, herd rebuilding phases like we did in late 2013-14 that could set off a pretty exciting time for producers. But we just got to get through a couple of difficult months, I think, here, Casey, before we get there. So,
right on. Well, good stuff as usual, Shawn. Folks want to reach out to you and get more information about what it is you're doing at Hacket Financial. What's the best way to do that?
Our website is Hackett, HACKETT, advisors.com. All kinds of information on there to let people know what we do and how we do it to see if we could be of value to your listeners.
Right on, man. Thanks for being on the podcast, Shawn. It's always fun.
Thanks, Casey. Always a blast. And keep up your good work.
Good luck there in Little Rock. And just when you walk in there, just yell "Suey Pig," just like that real loud, and everyone's gonna love you. You're gonna be everyone's favorite. I promise you. Okay. All right. So with that, I'm Casey Seymour with Moving Iron Podcast. You can find me on Facebook, Twitter, and Instagram at Moving Iron LLC. You can also go to Moving Iron Podcast on LinkedIn. You can go to the ever so cleverly named Moving Iron Podcast YouTube channel to see the video version of this. And you can also check me out on MovingIronLLC.com and find everything Moving Iron related. 2023 National Moving Iron Summit is scheduled for September 11th, 12th, and 13th in Nashville, Tennessee. That's been booked. Still working through the agenda and what that'll look like. So look for more information on that as it draws closer here towards the end of the year. I'll have a lot more information up for it about those kind of things there. So with that, I'm Casey Seymour with Shawn Hacket. Let's go, smart folks. Out.
Moving iron in the 21st century.